we're going to talk about share prices. And I want to use Apple as an example. As you can see, their share price today is up, again, doing this in the middle of the day, but about $26 a share. They just reported earnings, and it's impacting their share price. So remember, a company is worth the sum of its future cash flows. So we need to predict what those cash flows are and value the share price today. So I want to give you a sense of how we do that for a publicly traded company, because there's a group of analysts called the sell side that their job is to actually help investors understand the answer to that question. And if we look here in Bloomberg, and you can see that under ANR is the short code, these are the sell side analysts that are covering Apple Computer. And you can see scrollable list down here. And it's going to be like Jeriel Ong from Deutsche Bank, or Catherine Lynn Huberty from Morgan Stanley, Rod Hall, Goldman Sachs, etc. And so their job is to write the buy, sell, hold opinions and to come up with a target share price for a company. In fact, to give a sense of real time, these analysts basically today, greens are buys, holds are worth 3 points, which are yellow, and sells are 1 point, which are red. You see the scoring over here. 29 of the analysts that are reporting to Bloomberg say today Apple's a buy, 10 hold, sells 5. On a 5-point scale, buys are worth 5, holds are worth 3, sells are worth 1. Apple right now is a 4.09 out of 5. Now, this is basically an expectation of what you expect them to do over the next year or so. So the 12-month price target, these are all the price targets, which are updated over time. You can see a lot of them were updated today, which is July 31st. Is averaged, and the average 12-month price target is 407 based on the guesses of the analysts. And today's price is around 411, which basically means that the market doesn't see a lot of upside beyond where the Apple share price is today. And in the last 12 months through this morning, it's gone up 95%. So big run up until today, including big share price jump today, but don't see too much more upside at this point in time unless something radically changes. Now, again, how do we come up with these share prices? Well, if I take Deutsche Bank as an example, this analyst for Deutsche Bank is a specialist in technology. So their job is to not only cover Apple, but to cover all of these companies. Now, what they'll do is they will also create a spreadsheet, and they'll upload that spreadsheet to Bloomberg, forecasting the actual performance, revenues, costs, cash flows, etc., into the future. And since these are specialists, you should have a very good idea what's going on in the company. Now, you can see this is actually a copy of their model. It's locked unless you have access to it. But basically, all of these analysts are making guesses on the future of what's happening to Apple. It's then aggregated and put into this screen, which is called the consensus estimate. And so basically, it's a wisdom of the crowd. And so you can see that Apple's fiscal year 2020, which ends September 30th, the average of all these analysts is $270,551 million in revenue and $12.85 per share. All right. And so how did they get $270 billion worth of revenue? Well, you can see from this box that all of the analysts, the 37 analysts that have put in their guesses and spreadsheets, the high right now is $279.524 billion. The lowest analyst is $262.362 billion. 41 guesses were actually made. 4 were deemed mathematical outliers. They were excluded. Of the remaining 37, the average is 275.51. And that becomes what's known as the consensus estimate. And you can see that Apple's revenue estimates are expected to grow in their fiscal 2021 to $305 billion, $321 billion, and $334 billion over the next few years, getting a sense of profit growth as well as revenue growth. Now, what I'm going to do is I'm going to switch this to the quarterly view, because in addition to forecasting annually, they forecast quarterly. So this was the forecast for the June 30th, 2020 quarter, which Apple reported yesterday at the end of the closing bell. So basically, the expectation for the analysts, wisdom of the crowd, was that Apple would earn $2.07 per share. When Apple actually reported for the last quarter, they earned $2.58 per share, a very big positive surprise. Last quarter, they were expected to sell $52.299 billion worth of products. Apple ended up selling $59.685 billion. They came in almost $7 billion higher in the quarter of sales than people expected. Right? Margin was expected to be 38% gross margin. They came in right around 38%. Operating profit was only supposed to be $10.49 billion. Apple reported $13.091 billion and basically exceeded the targets dramatically. So here's the idea. I set up a baseline for what I think the cash flows are going to be in the future. I price your stock accordingly. So stock price has less to do with performance than performance against that expectation. Apple generated a lot more cash flow than we expected. As a result of that, I have to reprice Apple, share price up $26 today. If I actually look at the share price, GP, this is the 12-month share price where they've almost doubled, but I'm going to switch this to the 3-day view. You'll see that based on the news the last 3 days, after the market, they came out, $7 billion extra revenue, an extra bunch of cash for profit. I'm now underestimating how they're doing in the future. I put that into my model, I reprice Apple, and that's now how the share price went up by $26 today so far and is trading at $4.10 per share. So just to get a sense of how the pricing works in the models, we do our equity analysis and the role of the sell side analysts.